Welcome back to the show. It gives me great pleasure as always to introduce Budgie Wright. He's a senior real estate consultant for Barbican Square Limited. Morning to you, Budgie.
Morning, miss.
Right, Brexit, top down. What's going on?
Well, as we know, it looks still looking like a shambles as far as the negotiations are concerned.
Yep.
Although I'm keen to hope that part of that is because we're not just crumbling and falling in a heap at the behest of Juncker and his cronies. So that would be a positive, I think, if we're not just rolling over and taking what they say as gospel. As far as the property market is concerned, I think it has given us continued consolidation. I think that if you look at concerns over interest rates, which I think are poised to continue to rise, that's slowing things down. And if you look at the construction sector, for example, reports coming out from various authorities and bodies within the construction sector tell us that we're probably going to have a pretty dismal 2018 from their perspective.
So how dismal is that construction sector?
Well, I think the growth is negligible.
Because if you walk around London at the moment, there's developments here, there, and everywhere.
I think but the problem you've got is that land costs haven't yet come back and reflected perhaps the reality of the situation. So land prices are still high.
Right.
The costs have increased. You know, inflation is causing cost increases across the board, from materials to labour. If people are leaving the UK, as per a number of reports saying that foreign workers are leaving the NHS, they'll be leaving the building sector, then you've got pressures there. You've got labour pressures, which will increase the costs, and that will ultimately pan out to, I think, developers slowing projects or stopping them,
right,
or not commencing them, should I say, if those costs are coming to bear.
You've done a number of shows over the years with us. You've always been super bullish on property as a buy and hold strategy, and your big argument has always been that there's a supply-demand imbalance. Is this going to change with Brexit?
Well, I think if, as we said, the development and construction sector slows down, that will have a knock-on effect. We're already perennially behind the required number of homes, certainly in London and in the UK as a broader base, for those that we need. So it artificially, I think, puts at least a floor under pricing. You know, if we've still got too many buyers, not enough new homes, then the pace of decline, I think, in house prices will be slow. So
we shouldn't all be rushing for the door.
I don't think so. I think, you know, again, you've got the transaction costs to take into account. You know, if you sell out and you buy back, your costs can be 10 to 15 to 20%, depending on how high your stamp duty liability is. I don't know that there's a 20 to 30% crash in this market that would make it a good trade to be out and then wait to try and find the bottom.
Well, I know certainly people who have tried to find a bottom and they've sold their properties and they've tried to come back in, and then suddenly they fall behind. And
I think the trick to do would be to look at how you would line up a prospective purchase first, and then work out how you would get out and make a profit.
Budgie, as always, thought-provoking. Thank you very much indeed for your time.